2 weeks ago, my friend texted me and told me he never wanted to work again. I said great, and I want a flying car and a submarine. Just kidding, but I did ask him how much money he needed monthly to maintain his current lifestyle. He responded with about $4,000 a month, which is about 50 grand a year. So how can you make $50,000 a year without doing much work? Well, there's a couple of ways. Number one, sell 5 kidneys. All you need is 4 really good friends who are willing to lend you one of theirs. Number 2, sell some feet pics on OnlyFans. And finally, number 3, create your own dropshipping or forex day trading course and scam people for a living. Now, if none of these sound appealing to you, don't worry, there is another option, and that is dividends. Dividends are often considered to be one of the only forms of true passive income. And that's why today we're going to be breaking down everything you need to know about dividends, including how much you need to invest to live off of dividends, some warnings as to why you shouldn't only invest in dividend stocks, and as well as some strategies to help you invest. But quickly, before we get into it, scroll down and click that big red subscribe button, as well as that thumbs up button down below, as it really helps out the channel. It means a lot, guys. Thank you very much. And now, let's get into it. Alright, so the first step to figuring out how much we need to invest to live off our dividends, we have to go back to math class. Let's go back to our previous example and say we need $50,000 a year to maintain our lifestyle, and that is our goal for our dividend income. Now, something important to note is the amount of dividends you'll get paid, known as your dividend yield, will depend on what you invest in. For example, Apple's dividend right now is 0.49%, which is about 96 cents per share. So for every $100 that you put into Apple stock, you'll be getting 49 cents in dividends. So using a little bit of math, all you need is $10 million invested into Apple, and you'll be making $50,000 a year. Yeah, you see how this is a little bit of a problem, right? I think that's a little more money than most of us have. Now, I know what you're thinking.
Thanks, Matt. I know I'm broke. Now tell me how to solve this problem.
And don't worry, I got you. The only way to solve this problem is to pick the right investments. Different companies and their stocks pay different dividend yields. For example, if we check out the Dividend Aristocrat list, we'll find 67 companies in the S&P 500 that pay consistent and rising dividend rates. And if we take the dividend average from all the listed companies, we'll see that the average rate is around 1 to 4%, which is a lot higher than Apple's dividend yield of 0.49% that we mentioned previously. For example, the company 3M is giving out a dividend yield of 6%. So if you wanted the same $50,000 dividend yield income, you'd only have to invest $900,000 compared to the $10 million with Apple. So you can easily see how big of a deal and how important it is to pick the right companies to invest in terms of dividend yields. Now, to be realistic, and hopefully you already knew this because it's really important in terms of risk management, but let's assume you aren't investing everything into one specific company, because you probably shouldn't. That would be very bad. You'll probably own a variety of stocks, or maybe an index fund or an ETF to help you diversify your portfolio. Now, in my research and experience, the average dividend yield for your portfolio should be around 3 to 4% if you're looking for some high dividend income. But because I'm an amazing person, I'll give you this chart to help you figure out how much you need to invest to make $50,000 in dividend income, depending on the dividend yield of your portfolio. Now, as you can see, and probably would have guessed, the amount you need to invest to make that $50,000 in dividend income varies drastically depending on the dividend yield. If your dividend yield is like Apple stock at 0.5%, then you're going to need a lot more money than if your dividend yield was, say, 6% for your portfolio. Now, you might be asking,
Matt, why can't I put all of my money into a company like 3M that pays me a high dividend?
Well, let me explain. When companies pay out dividends, the money is coming from the business, so it basically means that they think they have no better use for the money, so they just give it away to you. Now, that can mean one of two things. Number one, the company doesn't have as much room for growth. And number two, the company is just incompetent. This brings me to an important point, and that is that I don't think dividend investing is for everyone, and let me explain why. Companies that usually pay high dividends tend to be more stable and have less room for future growth. So if you're a younger investor or willing to take on more risk, dividend stocks are not really what you want to focus on. When it comes to dividends, a lot of people don't talk about the reality of them. The truth is, they'll probably never be able to replace most people's income. The average net worth in the United States is about $750,000. If you invested that entire $750,000 into a high dividend stock like 3M, you wouldn't even come close to that $50,000 goal, which is around the average income for the average American. Not to mention that from the $750,000 average net worth, that a house probably takes up the bulk of that, so you can't really invest it. So if dividends aren't gonna work out for you, then what should you do? Well, if you're young like me, which most of my viewers are between the ages of 18 and 35, we have to invest a little bit differently. While you're still young, you should be investing for growth, and there's a few reasons for this. Number one, you don't need the money. You're young, you're working, and maybe you still live with your parents or can fall back on them if you need, so you can take on more risk and volatility in your portfolio. And let me just tell you, that is not gonna happen with dividend stocks. Number two is compound interest. Gains compound over time, but if you're getting paid out dividends, that's coming from your gains, and they aren't being compounded. Unless, of course, you invest them back into the same company, but then you could be getting taxed on those dividends, so you're just losing money because dividends are taxed. So when you're young, focus on growth and take on a little bit more risk and volatility. And when you get older, you can shift to more stable investments that generate cash like dividend stocks. And if you're 22 and want to buy a bond that pays 1.5% interest for 10 years, well, I don't know what to say to you. Good luck on your investing journey. And the same goes for the opposite. If you're 58 and want to throw all your life savings into some penny stocks because Jordan called you up and told you it was the next Microsoft, well, good luck. Anyways, you came here to learn how much you need to invest to live off of dividends. So here you go, let me summarize it for you. Number one, figure out how much your lifestyle will cost. Include housing, transportation, food, vacations, and any other expenses to find out your desired dividend income. Then take that number and divide it by the dividend yield of your portfolio. For example, say you want to make that $50,000 a year and your dividend currently yields about a 3% dividend. After doing the math, you'll find out exactly how much you need invested to make that desired yearly dividend income. So there you have it. That's all I have for you guys today. Make sure to subscribe and click that like button if you enjoyed the content. And with that, I will see you guys next time.